Good morning, all. Camelback Trading 2724 and the pitfuturestrading.com. Coming to you this Wednesday morning, March 18th, and we're looking at the last 2+ days of the market profile of the SPY ETF here on Window Trader. And as you can see, we're trading right at the bottom of the last 2 days' ranges. Said last night there was a silver lining, how we took out Monday's low only to snap back in and close towards the top of Monday's range. However, I did say we were one time framing down and nothing has changed, even though we rallied whatever it was, $17 or so. I said the goal was to take out yesterday and Monday's high, and you basically had air up to that 271 level. I said if that doesn't happen, nothing has changed. Well, it looks like early this morning, nothing has changed as we are back down and like a chicken pecking you to death at some point. One time down, two time down. This is the third time down here. I would imagine we're going to take out both Monday and Tuesday's lows and finally go for the 2018 low of December. So let's go over destinations and a game plan before we look at the charts. So right now, on the upside, our first destination, now, if we do gap lower, right, we still have just over an hour to go prior to the opening. If we gap lower, it would be yesterday's low of 237.07 if we gap lower. Then we have today's pre-market high, which is 243.52. Actually, you know what? That's wrong. I'm going to use 240.83. That's my pre-market high, 240.83. Then we have 256. I'm sorry, we're going to use 10 wide now. That was a downside destination, right? Now it's an upside. So 250.34 would be 10 wide, next destination, and then yesterday's high of 256.17. For the downside, if we do not gap lower, we'll use yesterday's low of 237.07. The afternoon pullback low in H is obviously being totally breached this morning. Now, I gave you a bunch of downside destinations the last couple of days. I'll give you a couple real quick. 233.76, which is that monthly low and yearly low of 2018. 233.18 daily low. 233.08 daily low. 232.88 weekly low, 232.51 monthly low, 231.61 monthly lows. Those are two other important areas right there, those two monthly lows that are fairly close to each other. 231.38 afternoon pullback low from February 10th. These are all 2017 destinations. And 230.88 daily low. And we'll stop there. So what's the game plan for this morning? Well, we're opening right now below value, but in balance. Do I want to be a buyer right down here? Well, you certainly could be because you know you're out. But you're going to be buying with lower value. And if you are to take out yesterday's low, I would be out of that trade immediately, right? Because there's really nothing until that yearly low from 2018. I wouldn't take a short play right here either. I would wait. If we are in the next hour to gap lower, I would certainly take a short play with my destination being that level. Our pre-market low is 235 right now. So if that would use that as the first destination on the downside if we take out yesterday's low. And then you would certainly get to that yearly low. So if we gap lower or take out yesterday's low, I will be short looking for the pre-market low and then that monthly destination. If we come back into yesterday's range, or if we gap lower and it gets filled, I'm out of the trade and wait for more market-generated information. I really would rather look for that than to be a buyer against these two levels. Again, you could be, but it's something you better be aware of if they get both taken out to get out of that trade. Again, you'll have multiple opportunities today, so don't blow it at 9 o'clock in the morning. That's just 9:30 in the morning. Now, let's go to the charts because there's a bunch of things I'd like to talk about. Okay. So let's start with the monthly. Right? We said yesterday we hadn't taken out December of 18's low. Well, we're certainly close to it. If we take out yesterday's low, I would think we should finally get to it. The question being, what do we get below December of 18's low? Do we just come out of it and come right back into it and just stretch it a bit? Or are you going to get more longer-term sellers in here again and start pushing this down? My next big destination on the downside isn't until 208.38, which is November of 2016's low. Yes, we had those other two lows I spoke about around the 231.61 and 232.51. Those are lows from March and April of 17. But the reason they're not as big for me, I look for areas. We were one time framing up that whole time. I look for an area where we dipped below and had an outside month up, which is very powerful, right? Just like an outside month down. We had an outside month up in November of 16, and look what we did after that. We went up for a year. We didn't stop one time framing down until February of 2018. Right? 15 months. Pretty powerful stuff. So if we get below December of 18's low and pick up longer-term sellers that really want out, there's a good chance your next big destination is 208.38. On the weekly, well, same thing. Here's that weekly low of 233.76, which is the monthly low. Once that gets taken out, again, 208.38 is my next big destination. Now, let's go to the daily and talk about a few things. So we said, right, 3-day balance, came out of it downside. 2-day balance, came out of it downside. Well, 2-day balance, sellers are attempting to come out of it to the downside. No guarantee it's going to happen. I mean, look what happened at this level. We took out those 2 days, came back in, we closed back in it. It was still a 3-day balance. I thought things could be okay. Obviously, we gap lower the next day. Right now, until we do take out yesterday's low and get accepted. Again, acceptance is such a key word. And get accepted below it, all we are is in balance right now. If you go below it, especially if you gap low and don't come back into it, well, then we're starting our next leg to the downside. So, very important things. And I want to finish on this note because I've gotten a lot of comments, questions, criticism. I want to talk about a couple of things. First being what's gone on with the Fed. Again, I understand what they're trying to do, but this is a free market society, capitalist country. Everything that they've done, this is the day, March 3rd. March 3rd was the emergency rate cut, and we spiked this market, right? We had traded as low as 285.54 2 days earlier. They come out with that, and we rip up to 313.84, $28. Short-lived. Never saw that high again, and one time frame down for 4 days afterwards. Then on Sunday night, again, they do the emergency rate cut, all the repos, the money being infused into the system, and it got us nowhere. My point being is this. If this truly is a capitalist country, hey, we got to take the good with the bad. Who's to blame for this entire run-up with absolutely free money and cheap money and everything else and inflated earnings and company buybacks at all-time highs that do nothing for the average investor no matter what they tell you? But nobody complained because we kept going up. Now everybody's going nuts. Well, how can they do this? Well, you know what? You can't have it both ways. The market should be forced to find its own equilibrium. We've done two astounding things by the Fed, and we're at the lows of this cycle. Why doesn't the Fed and people in charge Let the market seek its own level. Maybe it is 208.38. Maybe it is these levels down at the 180, 182 level. Why don't you wait for some two-sided trade? These people aren't stupid. For Christ's sakes, Mnuchin was a top guy at Goldman Sachs. He should know what a chart looks like. Down balance, down balance, down balance. You need to find two-sided trade, so why don't you wait? Maybe you get some stability in the marketplace on its own, no matter where that level is, and then you start maybe infusing money or cutting rates or whatnot, when maybe the market had found the bottom on its own, rather than to try to do this up here, do this down here, and now we're looking to go lower in this cycle. That's number one. Number two, they better not start picking and choosing who they want to save. The airline industry? How dare they? That's one of the industries in our lifetime that's gone back 50 years since it started. They couldn't care anything about their passengers. Higher fees, smaller seats, online and just on-time departures and arrivals, horrible. How dare they? Same with Boeing. Boeing's buying back its stock at $400 a share, and now they want a government bailout. Same with the hotel industry. You ever see what fees are tacked on when you go to book a hotel room? If this is truly a free market society, let these companies fail. Someone will always, always pick up the slack. We're not going to go, it's not going to be airlines all go out of business and we don't fly anymore. Somebody else could come along. They can't do a job any worse than what's being done now by the airlines. That goes for every industry. Nobody's bailing out the individual investor. They want to send $1,000 to somebody? Are you kidding me? You know how many jobs are going to be lost over what's taking place here? And the only ones that are going to benefit are the companies that get bailed out and the people like Warren Buffett who will be buying stock for pennies on the dollar and get government deals to help bail out companies like he did back in 08, 09. Don't fool yourself, people. If they truly want this to be America, then let the free markets work. Good luck trading today. Have a great day, and we'll recap at 4 p.m.